Hello, I'm Brett Carleton, sending greetings to you from the team here at Heritage Wealth Management. I'm going to hit on just some of the highlights from this third quarter of this year and then talk about my impression and I think what that means going forward. And of course, the first one is the passage of the one big beautiful bill, the OBBBA. And it doesn't matter what side you are as far as thinking on that bill goes. It's important because it makes the tax code as permanent as tax codes can be. So now we can start planning for year end and as we look into 26 and beyond. So it's very important from our perspective because now we know what the tax rates are going forward. Some other real big things that came out of it were some additional deductions for those over 65 and some incentives for businesses to make capital investments into their business, which ultimately impacts their growth going forward. So we think some very positive things came out of that. And it will allow us again to do some planning here as we move into the end of the year with confidence, knowing what the tax rates will be. The second big really economic thing that came out just actually happened a couple of weeks ago, and it was the Federal Reserve changing their stance on interest rates, and they lowered interest rates. And I think we'll see that trend continue, at least through the end of the year and possibly even into next year. And I don't know that the economy currently needs a real monetary policy stimulus, but I do think a softening or an easing of monetary policy will be good for the economy. That will help lower interest rates, make housing more affordable, so that too will have many positive effects with it if they continue this trend. The Fed did announce they're less concerned about inflation right now, and actually that's one of the big topics I want to talk about too, is if you scrape out housing and some of these non-core items, inflation is right at the 2% target of the Federal Reserve. So I think we're right there. And even housing has begun to come down in some parts around the country quite dramatically. And it's a lagging indicator. So I do think as we get out in the next 12, 18 months, we really will see housing even come down in the inflation indicator. So it's a real positive. But as we look at some of the news that came out earlier this year, we think back to April and the announcements of all the tariffs and how the markets reacted, and they actually went down over 20% after the announcements of those tariffs. Well, now here we are, entering the fourth quarter of this year, and our international investments and our emerging or developing economy investments are up over 24% year to date. And who would have thought that? Announcing tariffs on these manufacturers that manufacture abroad, importing the U.S., that we would see that. And this just goes back to the fundamental belief, what we're constantly preaching is we can't get distracted by the noise. We have to stay in our plan and we have to stay invested in our plan. So just something I wanted to just really reinforce again now that we're about 6 months beyond that. But the other real big driver of the markets the last couple of years has been this AI or the artificial intelligence drive. And I think that has the potential to be every bit as much impactful on the economy as the whole internet revolution. And the internet is part of our everyday life now, and I think artificial intelligence will too. And I'm actually going to do something specifically on artificial intelligence at a later time where I can delve more into that because there's so much fear around it. But we've gone through these major shifting points in time. And so I'll talk about that in another video, but I think that has a potential to make the U.S. the U.S. workers so much more productive going forward that could drive economic growth for years to come. So something very exciting to think about. And I finally want to close with reasons for optimism. The American consumer is healthy. Since the financial crisis, they've delevered to levels that we haven't seen since really the 1960s. So they're not over-levered. Employment still remains strong. Consumers are spending. We have record household net worth in the United States right now. All reasons for people to feel optimistic about continuing to spend and economic growth. So again, I just want to close with we have to tune out the noise. And with just social media and Twitter and these things, it is so easy to get distracted by the latest news story. But what we have to remember is they are trying to get our attention. These news stories are selling advertising. The more dramatic, The more scary these news stories are, the more likely we are to tune into them and thus see the advertising that they're selling. So as always, please let me know if you have any questions, comments, things that you'd like us to follow up on, and we'll be happy to talk with you. So have a great fall, and we'll see you here at the beginning of the year.